Yeah, so I think TLT is going to have weakness until the SPY gets into that danger zone, and then I think, well, let's talk about it. Okay, so we know the central banks are, in general, they're in the process of lowering interest rates and moving towards being ready, at least, to buy up debt. I think Dean's chatting with us right now. So so we know the banks are easing monetary policy. That's why we want to be long gold, and that's why we want to be long equities, and also the bond market. But I don't think they're dropping the rates fast enough to appease the bond market at this point in time. So I think the bond market not only wants rate cuts, they want the central banks to essentially tell them, hey, we're going to let you out of this position. Because if they tried to start dumping it all at once, there's no way they could all get out. There's just no way. And so that would crash the bond market. So they're not going to do that. There's a rumor out that Drunken Miller was starting to do profits over the last day or two. Okay, wait, Dean, let's see. You should have audio. Let's see.
Why? You have a mask?
Yeah, it's right there next to her door. You walk in, you just take a mask out of the box and go in.
Somebody will shoot me, think I'm robbing the place.
I'll take you up there.
I'm gonna mute Oscar. I think Oscar's on his. Okay, Oscar's in his office. All right. So we know what the banks are doing. Next question is, how will the markets react, and also what's happening with the trade war? So if everything just stays how they are and these trade tensions slowly ease, I think we can see a huge boom in stocks, especially if we get the central banks to agree to QE, which would allow all this money that's tied up and kind of locked into this bond market. They know they really couldn't sell right now without crashing the bond market. So they're kind of stuck in there. At some point, I believe the central banks have no choice but to come in, pick some sort of yield rate, peg it down, and let all these banks out of the position. So that's what I'm expecting will happen at some point. But the other moving piece is what is happening with China. They're more likely to do the QE and keep lowering these rates and allow the investors out of the bond portfolio if the trade war is escalating. Now, if it's not escalating, that causes a whole nother set of problems, but it should be very bullish for equities and potentially create a sell-off in bonds. So my expectation is that China has their 70th year anniversary coming up October 1st. That's a huge celebration. We're seeing them being nicer than ever. And here's some of the important content that has hit. China is expected to agree more American agricultural products in hopes of a better trade deal with U.S. Okay, sure, it's not the first time they've told us this, but they're facing two things. One, inflation in food prices at the same time as deflation for a lot of their hardware that they sell. So their demand for their core industrial products they create is dropping dramatically, and at the same time, their food prices are inflating very rapidly. So that is very troublesome for China, and what is why I think they might actually be willing to not do 99% of the stuff in the deal, but they might be willing to buy some farming goods. Trump might say, okay, if you do that, we'll say we're going to continue the dialogue, we'll remove the Christmas tariffs, and we'll give Huawei a little bit of a break. So that's what I'm thinking could potentially happen in the next 60 days. That may be extremely bullish for stocks, give the bond market and the gold market a lot of trouble. So if that did happen, I'd still be skeptical. I might recommend we buy a put option to protect our gold. I don't want to sell a call against the gold, because if it does shoot higher because of QE, because of what the banks are doing, I don't want to miss out on that potential return. Okay, so that's what I'm looking at for potential good outcome. If things just kind of stay in nowhere land, I still think it's enough to bubble up the stock market. Maybe the bonds just kind of hang around where they are. Maybe gold hangs out right around where it is. And then on the other breath, if China does make some moves. Here's the best chart. If you guys really want a heads up, this seems to be the single best way to predict trouble before it happens. Let me pull up the chart. I'm sure you guys know what it will be. There it is. Now you can download the Bloomberg app, go to the currency section, and you can have a constant view of this CNH. Every time this thing devalues, goes to a higher level, not hours later, we're seeing Chinese US equities have a sell-off, and we're seeing rhetoric either from China or from US that is very aggressive. So you can see we've had this nice rally, and we've seen that conversion rate tighten up. So my expectation is that this trend is nowhere near over, and that this will potentially devalue towards the 8 to 10 range. Now that is a long ways away. It will slowly happen, but the longer this trade war persists, the weaker China becomes, the more they're going to have to devalue their currency, print money, and it causes all of their trading partners to make the same moves. So this is the best leading indicator I have right now for you guys to try to predict trouble before it happens. So right now it's sold off. Everything's looking peachy. They're talking about buying farming goods. Trump's still being a little nasty with his vernacular towards China. And China's going into this anniversary. So will Trump try to poke the bear a little bit while they are going into the celebration? I don't know. It's really hard to predict. I know he does want the Fed to lower rates, so he may do some escalation just to get lower rates. So that's the hardest part to predict, and what we're really looking out for. So yeah, current setup, we're trading Facebook on Tuesday, and that's performed well for us. Little kind of lame compared to what I was hoping for. Let me pull up that chart. We did get Facebook to pop to something like 191 and then sold off. Zuckerberg's been selling a bunch of shares. My plan is to play this one until the SPY's pretty much above 300 and staying above that level for a considerable time. At that point, we have a couple options. I like Microsoft because it's less volatile whenever the next escalation does happen. I would like to get us long silver, but not until I think the equity rallies really run its course. Let's take a look at the silver chart. So you can see that dramatic sell-off. Again, we would be using silver ETF for income, not for trying to get growth. We're using GDX for the growth in this same sector, but I would like to get back into silver. Now, on the other hand, if we do see them buy farming goods, I think that could be incredibly bullish for EEM, and I think it has 20% upside to get back to that 50 level very quickly. So that's kind of my options on the Tuesday trade. We're going to hang into Facebook for probably another week or two. At that point, decide whether we want to go to Microsoft, EEM, or SLV. So that's kind of what to expect depending on what happens. If we think nothing's going to happen with the farming goods, prices are at nose-bleeding levels, we get to that danger zone, that's when I would like to potentially, I'm getting a reverb now. That's when I would potentially want to go into SLV. If they are going to pick up farming goods, screw Microsoft, we want to go long emerging markets. In terms of the Thursday play on the TLT, I think we're stuck in a range, maybe going lower. Let me pull up that 30-year. So I do think this could perk up considerably higher as long as the SPY keeps rallying, and I think the SPY will keep rallying. So until we get a little bit higher, probably closer to 310 on the SPY, I'll continue to set up our options to profit from a down move in the TLT. and higher yields on the bonds. And this is all assuming that the trade war continues to de-escalate. So that's sort of what I believe will happen in the next few weeks and how we're going to play it. Of course, if we see the conversion rate of the won devalue rapidly, that'll be an alarm bell to take the protection off the TLT, let it do its job, and then potentially start getting a little more protective on the SPY, and then look at silver for Tuesday trade. Okay, so real quick, any questions on the plans for the portfolio? After that, I was going to jump into our boot camp and go through it and see if anybody has any questions on that. Tony just joined. Welcome, Tony. I just unmuted you in case you want to say hello. Again, this is recorded, so you can catch the beginning of it later on with the replay that goes out this evening. Any questions about our current market forecasts or trades? All right, guys. Well, let me jump into the boot camp presentation so you guys can see what it's all about. And I do want to mention we do have some financing plans if you call Dean to get you in on this. So this is not a boot camp that ends after 16 weeks. And let's face it, you know, if you're a kid and we put you in soccer camp for 16 weeks, sure, you're going to learn how to dribble the ball, but you're not going to be, you know, Messi. You're not going to be Michael Jordan in 16 weeks. And this program is absolutely not trying to turn you into the Michael Jordan of options trading. If you start following a lot of advisories out there or read some of these high-level banking reports where they talk about their option strategies, they can get awfully clever to the point where they're just kind of running a circle around themselves, kind of like the dog chasing his own tail. This program is not going to do that. Our goal with this 16-week boot camp is to essentially accomplish two things. Number one, to make you extremely proficient in following the trade alerts. So that's step one. Can you proficiently follow the trade alerts? Two, do you understand how the options are working? A lot of you can follow the trades. You have a general idea of how it works. But the second I start talking about in the money collar trades or upside down collar trades, all of a sudden it can get a little hairy. So I do want you to completely understand that. And then the third most important thing is trying to figure out, all right, well, what if I disappeared? Are you going to be able to continue, take the torch, generate retirement income for the rest of your life? Maybe not. Maybe right now we're able to help you catch the fish, but you're not really sure how or why. So the goal of this boot camp is to get you educated on all three of those things. And it's going to repeat itself 3 times a year for the rest of your life. So essentially, at the end of the day, what you're going to do is spend 2 hours with me on Tuesdays. It's recorded. At the end of the webinar, it's not like this where we're just chatting about our trade alerts. It's going to actually be a real lecture with interaction, quizzing, and at the end of it, you're going to get a resource email sent to you with a list of stuff to do, as well as a test. You replied to the test, I grade it. Now, if you don't do the test, I'm not going to flunk you and kick you out of class, but that's the mechanism for how we're going to teach this to you. So the program is going to repeat itself every 16 weeks. There'll be a few breaks for holidays, but other than that, what will be interesting is you'll get to see the same lesson applied to the macro environment about every 4 months. So every 4 months, we'll be reapplying the same lesson to new details hitting the financial markets. Now, on top of that, we have a Q&A webinar on Mondays. Now, this will not be a lecture. It will purely be designed to catch up students who have questions about previous materials. This is also designed so people can jump into the boot camp at any time. That way, if you decide a week or two after we've started, you can jump in, catch up on the previous lessons, and then use these Monday webinars to get caught up. So again, Monday, we have a private webinar for our bootcamp members where we're going to focus on catching you up, answering your questions, focusing on the content we've covered. Tuesday will be a 2-hour lecture. Sure, there'll be a little break in the middle, but think about it. 2 hours goes by so fast. And when we're trying to repetitively drill ideas into your brain, we're going to be covering the same content over and over and over again to really drill it into your head. Now, the last part of it, now this does not include food, hotel, or travel costs, but 3 times a year at the end of each boot camp, we want to invite you out to Albuquerque to come hang out, trade live for 2 days. We'll have a conference room at a nice hotel, and then finish it up with a dinner. I'll watch over your shoulder. You can place the trades in front of me. Again, these are not long trades that take a lot of time. We're not day trading. So again, this will be a lot of just getting to know each other, getting to meet some other people in our program. And if you really want me to, I'll be watching over your shoulders while you place your trades. So for new people who are getting started, this makes a lot of sense. Now, I know most people on this webinar are pretty good at option trading. So you may just want to fly out to hang out. Let's take a quick look at what exactly we're going to cover in the 16 weeks. And again, remember, it repeats, so we can reapply the same knowledge to new macro events that are happening every 4 months. So week 1 is the big picture. We're going to talk about what exactly is the SPY, the TLT, GDX, and EEM. Why these are really the only 4 ETFs you need for the rest of your life to have an extremely diversified portfolio that follows all the things we've been talking about, and how we're using the option market to generate income. We're also going to send you home with some phone apps to download, primarily Twitter, YouTube, Seeking Alpha, Bloomberg. I'm going to teach you how to use those. I'm going to teach you exactly which Twitter feeds I follow, which ones may be too much for you, but you may add on depending on how much time you want to invest. I'm going to show you exactly the YouTube channels I listen to, which news sites I watch, and which articles specifically I pull out of them. So like Zero Hedge, I don't read, but maybe 1 out of 20 articles. But I'll show you how to scan that to find what's important. And then we're going to send you home with the resource email and a test. You reply back with your answers. I send you back a grade. So that's week 1, big picture. Mainly, I'm going to try to set you up so that if I disappeared, you'll know how to get the big picture right so you can do the same strategy that I'm doing for you all on your own. So probably the most important week, even though it may seem quite simple, and we're not going to even touch a brokerage account. Week 2, we're going to learn how to do the trades in detail in interactive brokers. Now, Tasty Trade's great. There's a lot of platforms out there. I really like interactive brokers, but it's pretty much the exact same process in any broker. This part of the webinar, we're going to dive into how to actually execute the trades and navigate your brokerage account, as well as set it up. Some people actually have a hard time setting up their brokerage account to have access to everything. And we're also going to talk about how to play the currency market. If the trade war does continue to escalate, I'm looking to add a small position to short the currencies we do have access to that are related to the US-China trade war. Now, that'll be a tiny buy and hold position. We're not talking about using crazy leverage, day trading, Forex. No, no, no. This will be a lot like the buy and hold GDX position, where we can sit back, relax, and let this play out. Okay, week 3, we're going to dive into call options, primarily selling call options. We're going to go back in history and look at how the prices of call options change based on volatility. We're going to quiz you. What's a short call? What's a long call? What's an in-the-money call? What's an out-of-the-money call? We won't be connecting the dots as to how this ties into the SPY or the put yet. At this point, I just really want you to be extremely proficient with selling call options. Week 2, we'll talk about when would we buy a call option. Sometimes we may want to use the leverage of a call option to go long. Not very often, but some instances that may make sense, and we'll continue to dive into the call options. So this gives us a full 2 weeks to really master what the heck a call option is. We're not going to try to relate it to anything yet. I just want you to be extremely proficient at all aspects of call options. Week 5, let's do the opposite. Now, why do we buy puts and sell calls? I think you guys know the answer in general, but we're going to really get into the details of put options. What makes them go up in value? What makes them go down in value? Why we sell them? Why we sometimes buy them? And how exactly that works. Week 6, we'll talk about in the money, out of the money put options, a little bit about selling put options. We have a whole lesson just designated for selling put options, but I did want to give 2 full weeks to really master call options, put options for a full month. Week 7, option callers, tight versus loose. So if we think there's a flat market, tight. If we think there's a upward market, loose. You've seen a lot of these over the last few weeks. That's the most common setup for us. Week 8, we're going to do those upside down option callers. That's what we've done on the TLT most recently. If we're in a bear market or a recession and we're going to hang on to the SPY and the TLT, you better know how to do what we call an upside down option caller. Really, all that is we're selling an in-the-money call to finance an in-the-money put. And so again, go look at that TLT trade. That's how we were able to make profits safely betting down on the TLT. And in fact, I would argue the only real safe way to use a lot of capital to profit from a down move in any market is by owning the asset, selling a very valuable call option, which loses value, and then using the profits of that call option to buy an even more valuable in-the-money put. So this is a great, great trade for financial crises, and we'll spend an entire week just dedicated to going over that. Week 9, we're going to take a little break from options, jump into crypto. If you watch my live stream, I really think if you have a 1% position in Bitcoin and a 1% position in Ethereum, and you buy it with Robinhood, you'll have the easiest setup, the most secure setup. I don't particularly like Coinbase or Binance, which are popular, because they do require a considerable amount of security knowledge. Robinhood is really neat in that the phone app has all the security built into itself. You're not actually owning those assets, you're just owning some proxy to it. And again, we're not trying to have illegal money that we're going to hide from the government. We really just want to ride the wave in this US-China trade war. And my expectation is that we can add a couple percentage points to our total return, maybe up to 5% total profit on our total portfolio by only risking 2% of our total assets. 2017, we had a crypto portfolio that was up 11 times. So a 1% portfolio would have been up 11% total return. So 5% maybe less. We'll see just how nasty this China trade war gets, and if we can really get in a position where all the banks are printing money, buying their debt, the crypto could be a very easy money maker with low risk, considering we're only putting a tiny amount of capital there. So week 9, we'll give you a landscape of the cryptos, why we like Bitcoin and Ethereum at this point, which ones we might rotate into as those get expensive. And again, that's a whole week dedicated to that. Week 10, 11, and 12 are all dedicated to learning how to use your computer, first of all, how to set up your Chrome profile so you can quickly find your spreadsheet, how to access it in your Google Drive, how to use a spreadsheet in the first place. So week 1 is really very basic computer work, which I find is critical for people if they want to use the spreadsheets. We're going to teach you how to use your spreadsheet. You're going to find it takes a couple minutes a day. You're going to love it. You're going to feel like a professional hedge fund trader instead of just a cowboy whipping out trades. So definitely really recommend that you guys do start to use your spreadsheet. Of course, it's not the most important thing. We want you to jump in, start making money. The whole program's designed so you don't need a spreadsheet, but I think anybody who has used it, they realize it's not that bad. It takes a couple extra minutes, and now I have a very nice visual of what's going on in my portfolio. Okay, so week 11 and 12, we're actually going to sit there and fill in the trades from the previous weeks. We'll actually get to go fill in the real trades that you really put, fill it into your spreadsheet. I'll be checking your spreadsheets making sure they're filled out correctly. And I believe after 3 weeks of spreadsheet training, you're going to be pretty good at it. Now, from time to time, I do change out the template and issue new spreadsheets. We actually spent quite a bit of money in 2018 building the technology to be able to print these spreadsheets out, kind of like a Tesla mega factory. Well, we've got the same technology to create these spreadsheets and optimize them as time goes on. So we'll also spend some time saying, oh, hey, we had to issue a new template. Here's how you can quickly move your trades over. Week 13, we're going to talk about what to do during a financial crisis. We're not there yet, but if I were to disappear, I want you armed with the knowledge to know what exactly to do. So we'll talk about why most likely it will start with an equity crash, then a bond market crash, and then a gold crash. And if that is the case, as the dominoes fall, here's the ETFs to rotate into to catch some easy gains outside of those upside down callers. So for equities, I like these 3 ETFs. Again, this will be part of our buy and hold portfolio, which we're not going to put a lot of our capital in, but around 10 to 20%, depending on how convinced we are on the market move, makes sense. So those 3 ETFs would most likely be the first 3 to hop into. We may even actually jump into these at some point in the near future. I'm talking in the next 30 to 60 days when the SPY gets to those nose bleeding levels. TBF will help you short the TLT. We're nowhere near that point yet. SJB correlated to TBF. So this would be 2 you could couple together. And then eventually, and I'm talking eventually, DUST, the 3-time inverse gold ETF. So I'm not trying to short gold at any point this year. No way. I might buy a put option to protect the downside on our GDX, but I just don't see a real trade war resolution happening. So I think really what will happen is these tensions will continue to escalate until eventually we do get a stock market crash, which then quickly pushes money into the bond market, and then that will crack, and then that pushes money into gold. So that's what I'm expecting will eventually happen. Could it take years? Probably it will. So in week 13, we'll study at least the last 100 years of financial crisis. Ray Dalio has a nice book I'll send you home with for this week. It's only 850 pages long. It's a free book he gives out, and he's actually studied the last 300 years of financial crisis and put it into one nice book. We'll also talk about his market cycle theory, small cycles, 10 years, long cycles, 50 years. He thinks that we are in the final endings of a 50-year cycle, which means we may have a very long bear market when these bubbles do start to pop. Week 14, what to do after a financial crisis? Well, once we get a stock market that's sold off 50% or more, the SPY is great, but there are some alternatives that might make your life easier and provides a short period of very high returns. So QQQ, EEM, EWJ, it's just a very simple worldwide portfolio that'll give you general exposure to all equities markets. So that's the basket there. We'll talk about how do we use our spreadsheet to rotate into those. So you can see we have these already right here. I put silver in here just because I think they changed the ticker on that Asia, so I'll fix that up. But you can see we've thought this out and are prepared for this already in the spreadsheet. So we'll talk about how we can use the spreadsheet to calculate how much capital should go into each ETF. Again, now that's 14 weeks away and probably several years away before we need to do it. But now you'll know what to do and be prepared. At some point when rates are sky high, you can jump back into the bond market, and instead of the TLT, you might want to look at some of these riskier bond markets that can return a much higher profit. So we've got this basket here, and that will wrap up week 14. Week 15, we're going to talk about credit spreads and debit spreads. I had been trying to juice up the returns on our Tuesday, Thursday trade, successfully, by the way. by taking the profit from our TLT credit and then creating bull call spreads on GLD. So we did well with that. Problem was a lot of you guys were super confused. So I removed that and will be very cautious to use these in the future. So I think you have noticed over the last few weeks, I've kept the Monday, Tuesday, Wednesday, Thursday, Friday trades exclusively to a single security so that your life is very simple. So if I do ever issue any more spread trades, expect it to be part of the buy and hold portfolio, which is targeting people who are a little more advanced and are not going to get confused by something like that. Now, I wouldn't say a credit spread or a debit spread is really advanced, but from our portfolio's perspective, it will be the most advanced option trade that we would even need. Now, again, we don't need to make trading complex to do well. And I think we've proven that to you guys over the last several months. We can outperform the majority with less risk by just playing a very simple, smart strategy. Week 16, we'll talk about writing put options. That's a common question I get. It really doesn't fit into our strategy very well unless you wanted to pick up maybe some shares of a certain stock for a discount. So that's a little trick you can do to pick up shares. We'll talk about how people do try to emulate what we're doing by writing put options and why we don't do it. And that will really wrap up the 16-week course, and then it will repeat. So down below here, we have our calendar's not up yet. I have a calendar that'll pop up below. We're going to take the last week of December off and the first week of January. And then the first 2 weeks of July are currently the weeks off for the boot camp. So that's a good review of the boot camp. Any questions out there, guys? We now have 10 people in here. Let's see, we've got Richard May. Rich, I unmuted you if you want to say hello.
Hey, Jason, how you doing?
Good. How are you doing?
Still learning, but getting ahead here.
Yeah? You making some money, or are you still just watching?
I put on the trade for yesterday on Facebook.
Okay, cool. Well, we're up a little bit on that one. Now, I noticed you did join late. The replay will be sent out this afternoon if you want to rewatch it. Okay, Rich?
Okay, very good.
Let's see. Dean, are you still out there? He's got his mic muted.
Hey, Jay. Yeah, absolutely. How's it going?
Going good. How are you doing?
No complaints. It's been on an incredibly hot streak. Things are good. Looks like we might break through 3,000 today on the S&P 500. So
Yeah,
300 on SPY.
Way, isn't it? Let's see what SPY's at right now. Oh, it popped up there for a little bit.
Yeah, 299.72 right now.
Yeah.
Yeah, I wouldn't be surprised if they run it out the back at the close. So
We got 2 hours. Yeah. Yeah. Everything's been. Well, we finally got the escalation that I've been harping about that trade war escalation since June. We finally got it out of the way, so that's made our lives a lot easier now. How about out there, guys? You guys got any questions? Anybody interested in the boot camp? Or you guys just want me to catch the fish for you so you can take it home and eat it?
This is Tom, and I'm giving it some serious consideration. I haven't made up my mind yet, but I'm looking at it.
Sure. So what are you, what questions do you have so far about it?
I'm trying to fit it into my budget for right now.
Okay, so you want to do it just the budget. Well, talk to Dean. We can put together any kind of financing plan. It's important to remember this is not a 16-week boot camp, one and done. See you later. You know, this is basically you're going to have access to me for 2 hours, really 4 hours a week for as long as you want. My hope is to So I've been doing this business for about 10 years, where I was the manager. I was the man finding the gurus, having them to listen to all their crybaby complaints, watching the customers not get the guru, and had a few products of my own throughout the period that did do very well, actually. But, you know, I was teaching people how to go pull money out of penny stocks. They loved it. But it was definitely very aggressive, more of like a day trading thing. And after 10 years, I can tell you what we're doing now is so much better than anything I've ever seen from every guru out there. To have you guys come on board and tell me you're making the same money that the advisory is advertising, that's unheard of. You know, I don't want to badmouth anyone in particular, but they'll typically have a tiny group of insiders that will come out and give all these glowing testimonials, and then 99% of the other members, for whatever reason, are not getting the same results. In fact, they're losing money. So I really like what we're doing. I think we have something we can run for a long, long time, and would love to have you guys come on board for the boot camp. Because you know, there's only so much I can really accomplish in the advisory. We can give you the trade alerts, we can tell you why we're doing the trade, but to really take you to a level of understanding, it's going to be a lot more work. So it may take you 2, 3, 4 runs through the boot camp before you finally have really crystallized everything. Who knows? Maybe you'll be making better picks than I am by the end of the boot camp. But yeah, definitely. If you guys do decide you want to join, give Dean a call. We can figure out a payment plan for you that makes your life easy so you don't miss out. Oh, we got another member who just joined in, SHH Trading. I unmuted your mic if you want to say hi. How's it going? What's your name, SHH? I'm sorry, I'm not sure why you got loaded in there as that instead of your real name. Any questions about our strategy, predictions for the future, how to follow the trades, or questions about the boot camp? Another question, I'm just curious, have you ever taken any boot camps in the past, options trading related? Oh, Oscar says he's losing his view. Oh no, that's no good. From his, they're building around his office. All right, guys. Well, unless you guys have any questions, SHH, I know you joined late. The replay will come out. We went for about an hour, reviewed all my predictions for the future, talked about our most recent trades. We've been on a pretty hot winning streak this month and last month. So that's always good. We went over the boot camp, what's involved in that. And so far, I don't see any reason to change course. So now I do remember somebody, I think it was John Seager, was saying, hey, I thought you said you're not going to bet against the TLT, which I had told you guys because SPY was at something like 282 and selling off rapidly. And that's when I said, oh, this is going to stop very quickly. We've got the Fed lowering rates, most likely a period of ease in the China trade war. Now that we got through the Trump tweets, we saw how China would react. So I was expecting equities would rally and bonds would pull back. And what we saw was equities did rally very hard. We're generating great profits on the SPY, but that damn TLT just would not sell off. And in fact, it was going into a pretty good loss Wednesday. And then last Thursday, it just tanked and we hit the maximum profit. We put the same trade on again, betting down on the TLT last Thursday, and it's tanked again. So we'll most likely have a very similar trade setup for that tomorrow. Maybe not as aggressive because it has sold off pretty hard. So that's why we decided to stay course. We had predicted down move in the bonds, but I was just shocked with the equities rallying so hard and getting past those trade tensions. Not seeing the bonds sell off a little bit was really surprising me. It was telling me that it's so bad around the world that these bonds can't even take a tiny profit in the midst of equities rallying so hard. So it did come, and we did get that sell-off, and I believe now there's momentum against the TLT, so we'll keep playing that until we get a little bit higher. All right, guys. Well, I really appreciate your time. I'll give you guys one last chance for any questions or comments. All right. Well, good to hear everybody is following the program accurately and no questions. That's the goal. We just want to be making money. Did you want to say something, Rich?
No, I'm okay.
All right. Well, we do have another webinar tomorrow. I decided to invite y'all to both webinars. So if you want to get some extra time live, you'll see both webinars. Do remember tomorrow's is also for potential people joining the program. So Karen was on there last week and told everybody she's making money. Of course, we really appreciate that. If anybody else wants to come on there and do the same, we would appreciate it. And also, we'll review any important information live on the webinar tomorrow too. So just realize you will get the invite twice a week now. This webinar will be a little more private, exclusive, just our paid group. And if you do want to jump on and chat, hang out tomorrow, we do invite you and would love for you to share your results with potential people who may join the program. All right, thank you so much, and we'll be trading that TLT tomorrow.
Thanks, Jason. Thanks, team. And please feel free to call me if you have any questions about what we're doing, the boot camp, anything under the sun, as you all know, 505-322-7515. And yeah, you can always just reach out to us with any questions you have. You can always email us too at support@portfoliobuilder.io. Thanks, guys. Appreciate your time and look forward to helping you become defensive in the market.